Hi, everybody. TGIF. I know a lot of people feel that way. There's good reason for it. Hello, Kevin, Glenn, Pat. Hi, Ash. How are you? Windsor. Ben, nice to meet you. Hi, JT, John, Ben, all my trading warrior brothers and sisters. As you can tell by my voice, I'm a little fried. Glad it's Friday. So, hi, Jimmy, nice to meet you. I'd like to start off with words that people choke on, especially in Twitter, but also in trading rooms. And you know what, in life too. It's very hard.
I took a loss.
Isn't that cathartic?
Yeah.
But you know what else? People have a hard time also saying, I don't know, because they feel stupid. All right? I should always know. But you know what, bro? When you look at the weekly charts, there's plenty of good technical reasons not to know. You look at almost every instrument, what do you have? Inside of last week's range? I mean, it felt noisy. It felt active.
It was very.
But you know what? But what did it do? Euro, same thing. Inside week, pound inside week.
Well,
the only thing that wasn't was S&Ps.
Yeah,
the beach ball that won't stay underwater. So, yeah, what are you thinking?
No, I was just going to say that I didn't get a chance yesterday, and I had somebody mention, hey, Blake, you didn't talk about your losing trades. And I didn't get an opportunity yesterday because it was there was all that New Zealand activity.
Oh, yeah.
We had like, we had like every one of our team was on yesterday, so it was hard to squeeze it all in.
That's kind of a strange request because you always do.
Yeah, but I didn't yesterday, and in all fairness, I should, and I didn't get a chance. But I guess
come into my confessional, Blake. Tell us about your losers.
Right. Well, I have to begin by going. It was the day before.
The yen
in the afternoon. Yeah, and they stopped me out in the afternoon, and in the chat room. I was like, yeah, I got stopped out of this. Oh, that hurt. And, so the next morning, because all this New Zealand stuff was happening, I was, this is yesterday. I was like, I had to cover all of that. And then probably in my head, I already decided, I already talked about, but I sometimes forget. And when you chat about something like in the chat room, we have a really dynamic group, and we chat about stuff all day long, and I'll be like, okay, taking a little loss here, taking a gain here, taking a couple pips off the table, taking some profits, I got to shave off some risk here, and we talk about that all day long. And so in your head you realize, or you think, well, at least I thought, and I totally spaced it anyway, but I already think that I've already talked about it, but I forget that all the people on the webinars, that doesn't necessarily put them in the chat room, and not every one of you guys or gals that are listening in right now are in our chat room. So, but I did, like, on what was today, Friday, so it was Wednesday afternoon. I got stopped out of the yen pairs, and I was telling the guys and gals this morning, like, because I was up a little early this morning. I went to bed early. I got up, a good hour early. My body, as much as I want to try to make it sleep in a little bit, it just doesn't do it. It hasn't adjusted. Anyway, I was telling the guys and gals in the chat room, I'm like, despite my gains in the New Zealand over the last 24 hours, I'm still down on the week because of those yen pairs, because I was pretty aggressively short the euro yen, and it shot up in my face really aggressively. So but I'm fortunately I'm short New Zealand, and I'm got good positions on that have taken back a lot of those losses, nearly everything, but regardless, I'm still down on the week, and that speaks to how choppy this market is. I mean, it's a good gnarly market, and you're exactly right. A lot of inside weeks. The S&P continues to grind to all-time highs. Bonds have been whippy as all get out, and I think that really spells to the yen volatility that we've seen. But there's some good setups today. And you know what? I didn't mean to jump in on your conversation, and I want you to go ahead and finish your thoughts.
I do it to everyone. I do it to everyone.
But go ahead and finish your thoughts about taking losses, because I just want to jump in there because I had somebody who listens to the webinar.
Okay.
Talk, you know, say, like, you didn't talk about, you know, you talk about your gains, and this is yesterday, you talked about gains, but you didn't talk about your losses, and he's exactly right.
Obviously, they haven't been following you a long time because,
you know, and it's
I know you're one of the most humble, successful traders I know. That's why I joined you. I mean, you rarely brag about being right. You always talk about, you know, I was early here, I took a hit there, so you forgot one day to talk about your losses. Anyway, I was wrong. Okay, here, guys. You know, last week in the Euro Yen, I felt like a genius. All right, and then I thought we had a high, and then I was talking about selling retracements around this, you know, 20. This is a weekly. So right last week. Wrong this week. So I thought that we had a high here. So I was talking about selling retracements, 250, 280, didn't work. Now it looks like there might be something there, maybe one more push. But anyway, I was wrong. Okay. S&Ps, Norm's date seemed to be working. I'm not going to say I'm wrong on this one. Okay. Because you had close to 20 handles to take. And, you know, part of being right and being wrong is taking partial profit. So if you let an S&P trade, a 20 handle profit get away from you, you were wrong. Okay. So I thought we were going to have a reversal week. I pointed out yesterday it held the 2-week off number, and off we went after holding 25.46, which was the close 2 weeks ago. Oh, hey, I got lucky. I was right about Canada, but it was no trip to Hollywood. You know, it was a sell here, and we came off, and now we're holding. Sure isn't a, you know, any kind of windfall type of profit. And then yesterday I went in the chat room, and sure looked to me yesterday that we were going to get a move to about 90.90 in euro pound, and then it comes in, you know, sharply lower. I thought we would take out this high and we'd get a 3. I think possibly we still can. So it's part of it, okay, being wrong. And you know what? It's also good for you to be able to say it, because if you're not saying it, you're protecting your ego and you're not being honest with yourself. And I'm wrong all the time, okay? I'm right sometimes, I'm wrong sometimes. That's just part of trading. But as Blake always says, the only thing you can control, you can't control being right or wrong, but you can control the risk. And if you just learn that one thing while being here in face, you have a chance to eventually become a successful trader. So I really don't see any setups. I rarely do anything on Friday anyway, besides, you know, book squaring for myself. And I look at Fridays as giving me a clue as to what could happen early next week. The good thing about inside weeks, like in the Euro for next week, is that I've seen many inside weeks followed by outside weeks. So here's your inside week in the Euro. And if we finish okay, I'd look for us to start taking out the highs and then be looking for potentially a failure up here, okay, before we take out these highs. So inside weeks many times are followed by outside weeks. So you're going to see that a lot in your charts, inside weeks followed by engulfing candles. So trading is hard. Yeah, Ash, you know what? When I went to get my seat in Chicago and they were interviewing me to see if, you know, they were going to approve it, every one of these members were grizzled veterans, and I felt like a piece of raw meat, the way they were looking at me and saying, boy, we're going to be able to pick this kid's pocket. And a veteran pulled me aside and said, kid, this is a tough way to make an easy buck. And he was definitely right, because I've been at it for over three decades. And it really doesn't get easier, you just get better at it. So that's really all I have here today, Blake. I am excited about having Trent come here. Trent's a veteran of the industry, and I think there's going to be some real good edification. I consider.
Wait.
Yeah, Trent.
Fire. Dude, okay, so yeah. let me make mention to you guys. He's never been on with you, has he?
No.
Okay, Trent. Just so you guys know, Trent is of Drink Forex, or he is part of Drink Forex, but he is from Forest Parks FX, and he assists us in dealing with clients and routing them to different brokers. He is he's a younger guy, in his 30s, but he's been in the business for a decade or more. He knows so many people in the industry, and he's such a sharp guy, and I think you guys are going to enjoy him. He is the guy that did my interview for Drink Forex, maybe a few months ago, and so you guys are going to really enjoy the interview. And if you have any questions about brokers and spreads and and the mechanics of how brokers operate, I think you're going to really enjoy his interview and enjoy asking him questions. So you guys make sure you stick around today after the analysis part for Trent. It's going to be an important interview, because I would say next to knowing what you're doing in the markets, the second most important thing is
knowing who you're doing it with.
Knowing who you're doing it with. That's exactly right. And not only that, but making sure that you have a good understanding of how your broker operates, how they make money, and why they have to have why they make the money that they do, or have the prices that they do. It's really important. And so I think
he told me yesterday on Skype, Blake, that he said, I do much better with the question and answer period. So he's looking forward to the community asking him all questions that they have about the industry.
Absolutely. And he's done some trading in the past. He realized that he was I don't know if he'll tell you in his own words, and I don't know if maybe it's information he's not willing to share with everybody, but I'm going to share it anyway. But he said, hey, I've traded, and he traded on a desk before, and he realized that this, that it's a very hard business, and he, ended up knowing a lot of people in the industry, and he ended up diverting into this side of the business and the brokerage side, and helping other traders. So that he's going to be a really great person to listen to, because he does understand the markets. He understands how they operate. He understands how people trade them. He's traded them before in the past. So a very good wealth of knowledge, and I think you guys are going to enjoy it. I do want to take a moment, and here, Dale, I'll take over. I just want to cover a couple of things really quick for this Friday. Something that it seems like I don't get an opportunity to say that often is I'm glad you guys are all here. I have when I did the Morning Edge webinar for 14 years or whatever I did, I would have 2 hours every morning, so I could say a lot of things. I could cover most instruments. I could also tell you my thoughts and how I feel, and I try to cram it into a very short period of time. But it's good because you guys get so many views from great guys like Steve and Stelios and the rest of the team, and then you get great interviews. So I'm not taking away from that at all. But what I want to say is something that I don't often say is I'm glad you guys are all here. And we're just remember that this is a community of traders. Really, what we're dedicated to do is help each other. And we believe that with ForexAnalytix, we built a great platform that will deliver you analysis from a trusted team. And you can get that information, you know, as you're on the go. You get that information as it breaks. You get the, you know, notifications as they're happening in the markets. And we have obviously a really great chat room that we've built a nice community of traders that are in the chat room. Here, you guys can say hi really quick. And then you can see there's like 70 of us in there right now and you know, but you don't have to be part of the chat room. You don't have, you're part, as you're listening here on this webinar, you are in the community, and oops, I didn't want to take that away. You're in the community, and you know, we have priced our products to a point that we hope we make them available to almost every trader. I mean, obviously we have to charge something for what we do because we pay for this technology. And by the way, it is not cheap. It's not, just so you guys know, it's not cheap to build all this stuff. So we obviously we have to charge. We try to keep our prices below anybody else's in the industry so we can, you know, allow as many people to participate as possible. But and even if you can't be in this, you know, in this chat or using ForexAnalytix.
Oh, look what Leon said. Hey, look what Leon said.
FA even better than prior Blake webinars, even if possible, but it is. Oh, thanks, Leon.
How about that?
That's nice. Hey, is that Mario Draghi at the liquor store? It is.
Oh,
Thanks, Andrew. That's great. Okay, that's one of the quits. That's funny. Okay, but what I guess, here, let me get rid of that. But what I guess what I was trying to say is you guys are, you know, you guys are part of this community, even if you just listen into the webinar, because my goal had been, since I joined the Wise Trade group so many years ago, is to try to reshape the bell curve, because when I came to this industry, they told me, look, 95% of you guys are going to fail. And guess what? It was true. It was true. I watched so many traders over the years fall by the wayside. But what I had realized that, you know, with the Wise Trade group, I had directly impacted a lot of people, and a lot of those people are in our chat rooms today. They've been allowed to trade, make a living for their family, do the things they want to do and improve their life, whether it's trading full-time or trading part-time and enhancing their lives financially. And that, to me, has been reason enough over the last, you know, 15 odd years that I've been, you know, with the retail community. And I make all my money trading. You know, I don't even make any money from ForexAnalytix. So just so you guys all know that, I make all my money trading, every penny. And so the thing about doing what I do and doing what we do is to hopefully reshape that bell curve. Because if I can come in contact with 100 traders, and instead of 95 of those traders failing, I can say, oh, you know, maybe only 20 or 30% fail of the people that I come in contact with, and, you know, we trade with, and we help each other. And it's not just me, it's the whole community. I'm not saying just me alone. I'm just saying the whole community. Then we are reshaping the bell curve, because we're not going to catch every trader out of, you know, the 100,000 traders out there. I'm just using a round number. We may only capture a couple thousand of them, but out of those couple thousand, if we can take those couple thousand and make a majority of them profitable in the markets, then we are slightly reshaping the bell curve for the entire industry. And that, to me, is very important. And because I can guarantee you this: not everybody that I come in contact with is going to be successful. That I can guarantee. What I think that is happening, because I've seen it time and time again with all the traders that I've been associated with for 5, 10, there's traders that are in our chat room, have been in the chat I've been chatting with for 14 years now. Ron from Northern California is one, and I've met him in person multiple times. For example, if I can come in contact, we can come in contact with you, and we can reshape that, you know, curve, and we can give you a higher probability of becoming successful than we are successful as an organization, I feel. So anyway,
Can I add one thing, Blake, besides the traders that we help? We
Yes.
help what people would call competitors. The people that I bring in for interviews, many of them have services, and many of them get business from our community. And there's so much goodwill that we've developed with contemporaries in the industry. And I believe we're the only ones that actually do that, where we're not afraid of not getting all the business, or, you know, someone really likes somebody, they may want to have a different experience. And it reminds me of this thing I retweeted from a guy named Bella Afshar. And he said, you may know your reach on a social network, but it is hard to know your impact. Keep educating, inspiring, and adding value. It matters.
That's really nice. That is that's really nice, and it's so true. Hey, before we can get really deep into that subject, I really want to cover just a couple of things, Dale, and we can go back to it. Just because I looked at the time and I realized that we have Canadian data coming out, and we have
CPI and
all this Canadian data. Hey, Steve, good morning. So let's take a real quick look. Yeah, let's take a real quick look at the Canadian. And the Canadian, by the way, I have no Canadian exposure right now because frankly I don't know what to do with it. I know that the market is extremely long Canadian dollars, so that means the market is positioned COT data wise that it's positioned for a move lower. Okay, that's what the market is positioned for. Now we obviously have these highs that are developed here, but those are not in play today. What we're, you know, realistically dealing with is we're dealing with this, and we happen to be right in front of data, so we find ourselves mid-range. Whenever a lot of data is being released, economic data, you'll find yourself mid-range just before the data, right? That's where we're at. You can see mid-range before the data. We have CPI, retail sales that are coming out in the U.S. or in Canada, and that's going to be the mover today. So we're going to keep an eye on these two levels, and obviously a break below these lows. You know, you're now starting to move probably back towards the low, you know, 120s, and then a move above here, and we're going to be retesting those highs, which is obviously a pretty important, which could be developing more like a wedge higher. So we'll see as the data is released how the market's going to respond. And like I said, I have no Canadian data. Now, a couple other things I want to talk about really quick. I posted a chart of the dollar yen, and you can see the dollar yen is you know, forged some highs here, but more importantly is how the dollar yen is compared to the Nikkei. So Zero Hedge actually posted something earlier, and I forget what it was, that the Nikkei is up, you know, 5.5% this month. It's the biggest, you know, it's been up day after day after day after day for, you know, I forget what, like every day this month or something. I forget what the stat is. But what you'll notice here is the really, really big breakdown in the Nikkei yen relationship, and that has to be noticed, because a lot of people say, well, Blake, can the dollar yen play catch up? Of course it can. I mean, if we rally another 10% in the Nikkei, the dollar yen's probably going to go up. But when you get so stretched in an index like the Nikkei is, there's now a risk that we can have a snapback, you know, and if that happens, the dollar yen is going to get crushed, and the yen is going to rally probably quite significantly across the board. So that is something that I'm really watching, because obviously the risk right now is higher. But if we have any type of hiccup in the yen, or excuse me, in the Nikkei, any type of move lower in the Nikkei, that is going to be a problem for these yen pairs. The dollar yen will fall, the euro yen will stop its, you know, we can just cover them real quick. Let me get rid of this now. You know, the euro yen hasn't been following. The pound yen's getting a little bit of a lift, but still it hasn't been following. The Aussie yen hasn't been following. The New Zealand yen obviously is really on very critical support here, and the Canadian yen is, you know, up against resistance, but that really hasn't been following the Nikkei either. So if the Nikkei for any has any type of hiccup, any
Blake,
pullback, you are going to see. Yes, Steve.
sorry to interrupt, but it's exactly on what you're saying. The Nikkei has actually had more than 11.5% increase during the past 30 trading days. That is an implied, if we had this kind of a pace of more than 100% yearly increase.
Right.
So we are currently ascending in a rate that if we could hold for a year, the Nikkei would more than double.
Right, and don't forget, guys. And speaking of the Nikkei, don't forget. And I'll just and one of the reasons why people are so bullish on the Nikkei at the moment is the Japanese bubble of the 80s. I mean, we're way off of those highs. So people are obviously feeling that the Japan's going to play a little catch up with the U.S. But again, the rate of increase over the last month or so, or, you know, as you said, 30 days, has been really astonishing. And like I said, any type of move lower, any type of blip lower, it's going to have a very negative effect on the yen pairs, in my opinion. So it's something that we have to watch, because it could cause a dollar yen and all yen pair breakout to the upside. Flip side is maybe they don't play catch up, because I would assume that the Nikkei has been on the move for the last month. People have been buying or selling yen as a result, but understanding that there's a Japanese election this weekend, and also, you know, one of the reasons why the yen might be strong is because you got, you know, all this yen being used to buy equities in the Nikkei, so they're flipping out of yen. So, you know, selling yen or using yen to buy you know, Japanese stocks, and the Japanese Post has announced that they're allocating that too, and the, you know, Ministry of Finance Ministry of Finance has been buying, you know, Nikkei as well. So that's one thing that's fueling all these moves. But the yen has decoupled from that that correlation, which just needs to be monitored very closely. Now, like I said, we are just a couple minutes from the Canadian news, so I'll cover it live. Like I said, I don't have any exposure. I'm not even going to trade it at this point. I'm just kind of watching. I'm a bystander today. I am still long New Zealand pairs, meaning I'm short New Zealand. So I'm long Aussie New Zealand, pound New Zealand, and I'm continuing to maintain those. Hopefully you guys got a chance to read the blog that I posted real quick yesterday. It was it was a very quick, like, oh my gosh, I need to post this, so I need to get it out. So hopefully you guys had an opportunity to read that and you know, taking advantage of some of those moves. But in the meantime, let's see, we've got, and maybe Steve, you can help me with some of the data as I'm analyzing this, analyzing the Canadian as it moves.
Absolutely.
And we should be, thanks Steve, we are 30 seconds out.
By the way, since we have 30 seconds, Blake, within a couple of hours, we will also upload another post about the yen pairs. So people that are checking will tweet about it. Of course, in a couple of hours, we should have another blog post up on our site.
Fantastic, fantastic.
There it goes.
All right. Wow.
Yep. There it is.
Wait, no, that's pre. It's a widening of the spreads. Boom.
Wow. Core retail sales minus 0.7.
Wow.
So Grega called this. Grega called it looking for 27. Also, Blake, you know, you may have been wrong about a few things, but I want to acknowledge how, you know, I thought crude was going to break out this week. Your long-term trend line turned it away. That was a great technical argument.
Thank you. But man, oh my God. And if crude continues to sell off, that's only going to fuel this move. But wow, look at that dollar CAD. Wow. That is I almost want to pick it up on if we get any type of pullback here. Holy cow. I mean, look at this breakout.
Yeah.
So if we dip down into the 20s, I might be a buyer. But man, that's weak CPI, weak retail sales, weak all the way around.
Retail sales, etc., were very bad in comparison to what was expected.
Cow. Holy cow. Man, that is some nasty, gnarly data. Okay, well then, like I said, I'm buying the dollar Canadian on a dip. So if we can get a dip, it's questionable if we're going to get a dip. But man, holy moly. And so again, I'm going to reiterate, the market is poised for a downside move. Remember, the COT data still, as of last week, so that'd be since last Tuesday, had shown still a lot of Canadian longs. And so I doubt the data has fluctuated too much this week with the consolidation that we've seen. So therefore, it's going to just fuel this squeeze. So that's why I have no problems buying the dollar Canadian if it dips now. But I just don't know if it's going to dip. Because obviously, if you're not pre-positioned for something like this, it's hard to take advantage of it. You know,
and if you were, all I have to say is good guess.
Right. Yeah, that's it. It would be purely good flip of the coin you had there, because we were mid-range. I mean, going into that data, I mean, totally mid-range. So I don't. Now I just look for a dip like this. I mean, you hope it dips maybe into the 30s. Possibly, but I don't know if it's going to stop. I don't know if it's going to stop. The Canadian yen, boy, that just got destroyed. That hurts. Wow. That hurts because I got stopped out of it this week. So that's why it hurts. It hurts more of my pride than anything. But man, that looks ugly. Yeah. So let's go back over to the Canadian. Sorry. Flip back over to the Canadian here.
You know, Greg did say the other day, he said he was looking for 27. Greg Horvat, you know that guy, Wizard?
Who?
No, he's called Greg.
Oh, that guy. Yes, this guy. Let's see, his dollar Canadian. Oops, not harmonic.
When he was on the webinar. See, there you go. Yeah,
that was there from yesterday. Or this morning, actually. No, this morning.
Okay. All right.
Yeah. No, it was yesterday. Yep. He posted yesterday.
And with Greg, I don't think you could call it a guess. With me, it would have been a guess. But,
yeah, no. That's one of the benefits of, looking at multiple forms of analysis. It's, as you can see, we're all, kind of sideways, but he was still, pointing higher. So.
Oh, and Amanda caught it. Nice shot,
Amanda, and I know Matt in our chat room, which Matt's he's not present. Matt has a problem with Thursday night football, so yeah, beer and Thursday night football tend to go hand in hand with Matt, so that doesn't surprise me when he's not around in the morning on Fridays. But yeah, anyway, really strong move in the CAD. Really strong move in the CAD for those of you that did catch it, and Amanda has been very bullish the dollar Canadian as of the last couple of weeks too. So okay, really a couple other things that I want to cover really fast for those of you that are following along the New Zealand pairs. This Aussie New Zealand, it closed in breakout territory. But we are stalling at 127% extension on multiple time frames. So there's 127% extension here, 127% extension here, which has to go. It doesn't go unnoticed. Just realize where we're at. I still think we're going to push higher. We just have to. We have to work off some of these overbought conditions. I mean, you can see this 4-hour chart on the Aussie New Zealand. We probably need to back off to 112 again before. Yeah, we'll consolidate for a while. A lot of these overbought conditions, all you need is some consolidation to work them off. So that is that's happening there. And then also the pound New Zealand, which is up another 150 pips this morning. But this one, a lot of people go, well, you're getting overbought here, and there's some key resistance. Yeah, 190 is going to be a big deal. And I know I blogged about it yesterday, but this is going to be a big deal at 190. But if you don't think it can break 190, I'll tell you what, if you look at this pound dollar, let's go over to the pound here. let's go over the 4 hour. So last night we were approaching this. We were at channel support, but I had bids. As a matter of fact, my bid never got hit. I'm going to go ahead and cancel my order. I just canceled my order of my pound dollar. I had a bid down here to buy the pound at 130.60 overnight, because this is a big major triangle in the pound dollar. We rejected the upper end of the triangle a couple weeks back, and now we're down towards the lower end of this triangle. So here's the thing: if we break higher in the pound above 132, then the pound's probably heading back to 133, which is just going to fuel that pound New Zealand higher. And again, we're in the lower end of the apex of this triangle. If we head back to 134 or 135, that could put the pound New Zealand easily at 190, because the New Zealand dollar, for those of you that don't know, the New Zealand dollar is sitting on major support. Now, I had a conversation with a couple guys last night regarding the Kiwi, and they're like, well, I'm buying the Kiwi here and it's going so much higher, fair value is this. And I had a couple guys saying, well, the commodities cycle is coming, and commodities are going to rally. The New Zealand dollar may stop here. It may, because this is pretty key support. But I'm also not sold on the idea that the dollar is going to strengthen. I would not be surprised to see the euro dollar above 122 by year end. And actually, if you want my view, that is what I'm leaning towards, is that the dollar index is not going to do the head and shoulder pattern, which everybody believes. I don't believe it is. I think the dollar is actually going to end up continuing to weaken. So I wouldn't be surprised if the euro dollar is at 122, the pound dollar is at 136, and the Kiwi dollar might be at 71 cents. I think that all other currencies are going to outpace the Kiwi dollar. That's why I'm trading the commodity, or the cross rates. I think the Aussie dollar has a chance to still get to like 82, 84 cents. I just think that the Kiwi dollar is going to be left in the dust if there's dollar weakness. If there's dollar weakness and we see the pound, the euro, the Aussie, the dollar yen weaken, I think the Kiwi dollar just sits and maybe goes up a penny or two. It's not going to follow through. The flip side is if I'm wrong and the dollar does strengthen, this Kiwi dollar is going to get demolished, in my opinion. It's already on its way, and if the dollar starts to strengthen, this Kiwi dollar is going to see like the low 60s. If I'm wrong, and I could very easily be wrong, because I'm not, like I said, I'm not 100% confident that we're going to get dollar weakness. We might get dollar strength. So
Blake,
yes, Steve.
Sorry to interrupt. A fast comment. Exactly the view you're having now, the weekly view you're having in front of your screen in the Kiwi. Doesn't this remind you a lot of USD CAD before it broke down?
Yeah, it does. It does. It really does. And frankly, if you look at just kind of, I can probably draw it better just going like this. This is a weekly chart, guys. So if you just think of it more like this, we break this channel. What we're going to do is we're going to do another another channel that looks something like this down below. So we'll probably end up moving down towards the low 60s before consolidating. So this is very, yes, and Steve, it would be very reminiscent of the US dollar Canadian looking something like this. It's exactly what you just had pointed out. And I'll tell you guys that the Kiwi, because of the political situation in New Zealand, I think that's the catalyst. It's not so much, it's not, this has nothing to do with the dollar at this point in time. This has everything to do with the New Zealand dollar. Okay, and that I want to make sure everybody knows. That's why I'm not even short the New Zealand dollar. I'm short the New Zealand elsewhere. And I should be long actually the Euro New Zealand as well. I can't wrap my head around buying it up here because it's so strong, but I will acknowledge it is freaking strong right now. I just can't, I can't buy it as it's surging higher right at this point because I don't see the right, formation that fits what I need to see. All right. So anyway, I hope all of this analysis has found you well today, and I actually need to get ready for my trading day. I do want to pass it over to Steve because I know he's probably got a lot he wants to cover.
Blake, do you want to first perhaps make a comment? Michael is asking about the USD MXN. He's actually asking Stelios as well about his view on NAFTA, etc. But I know that you're following it very closely from a technical perspective. So if you wanted to briefly show your look in the USD MXN before Stelios can give us some macro commentary as well.
Well, 38% retracement, and we pulled back. And here's the thing about the U.S. dollar Mexican peso. I think the U.S. dollar Mexican peso is very bullish, and the peso is extremely bearish. The only thing that's going to really alter my view at this point in time is if we drop back below 1870. If we go below 1870, then I'm wrong. I think the risks are real that the U.S. really starts to play hardball with NAFTA. And if that's the case, because right now, obviously, Donald Trump, his focus is on taxes and trying to get the Senate and everybody in line and trying to work both sides of the aisle to get that pushed through. Once he has a good grip on okay, I think that the tax reform has a good shot of going through, his focus is probably going to come back to NAFTA. And then if he looks at the negotiations and said, hey, listen, we're not getting anywhere, and he wants to play hardball and say, I'm gonna pull the U.S. out of the NAFTA agreement, and here's my 6-month notice. And whether he can or can't is not the argument, is whether he threatens to or not. If he threatens to do that, the peso could get destroyed. We could see the peso, rally above 20. And obviously, if we find out legally he can't do it, and it actually has to go through Senate, because it's really a gray area with lawmakers, then the peso could go to 20 and then back to 18. Who knows? I mean, there could be a lot of volatility here, but I think technically, as long as we stay above this trend line here, there isn't really any reason to be bearish. So that would be my point of view, and you guys can feel free to add to those thoughts.
I can just add my opinion. I think NAFTA is a huge deal, and Mexico, although the president Nieto, he's been talking tough a little bit as well. They're not going to sit there. But at the end of the day, NAFTA is a huge deal, and the U.S. more or less holds all the cards. So I think if there's any kind of issue with NAFTA, it's going to be very bearish, the peso, and I don't know how they can come back from something like that. So overall, I'm very worried about the peso on the back of whatever might happen with NAFTA. I think it's probably fairly priced at the moment in the 18s, dollar Mexican, but any kind of sign that this might actually happen, something might actually happen with NAFTA, then I think it's going to be very, very bad for the peso.
Yeah, and I mean, let's imagine we haven't been. We've already been to 20. We've already been to 21. We've been to 22. That's not uncharted territory. So for us to retrace a portion of that back to 20, back to 20 and a half, back to 21, I mean, because this may all end up being rubbish, right? And maybe the U.S. has to stay, or the President Trump can't. He plays hardball and doesn't win, and then the peso is the biggest buy in the world. But for right now, the risks are slanted to a weaker peso, and I think it'd be silly to ignore that right now.
Yeah. And remember, a move from 19 to 21 is like 10%, so it's not a small move.
Right.
Yeah, exactly.
But also, the Kramer low. The Kramer low was formed in 2011, and I remember the date. Well, I don't remember the date exactly. We were at like 11 and change, and Kramer said it was going to below 10, and he said it was going to below 10, like right at the bottom of your red. No, yeah. Right at the not the very, very low, but right there. Yeah, right in 2011. And I was watching him on CNBC, and he's like, oh, it's going below 11, and I got long. I was like, no, it's not, and I got long. Anyway, but it doubled from there, and you know, that was a big move, obviously. But you know, from here, you're right. These are still sizable moves. They are sizable. Anyway, all right, guys. Hey, I got to get ready for my trading day. TGIF, everybody. Thank you all for being here. You guys are all, like I said earlier, I'm so glad that you all listeners are all part of this community. We do this together. You know, we hold hands, we hug, we cry, you know, over spilled milk and bad yen trades, you know, but we do it together. All right. You guys have a great weekend, and thanks, Dale. Thanks, Steve. Thanks, Delios.
Have a
Thank
great
you, Blake.
weekend.
Have a great day.
Yeah, have a great weekend, buddy.
All right.
Hi,
Bye-bye.
Steve. How are you, buddy?
Hey, Dale. I'm good, mate.
Good,
Good.
man.
Okay, just wanted to briefly show something about the Kiwi. Kiwi is currently testing, you know, a very important zone. We've had plenty of lows and highs formed in this zone. It's also the 78.6. So you know, this might do the trick and hold price action for the day. But there is no question that, you know, as we expected that this was a correction higher, that probably makes this like probably a third wave lower. So I think that the Kiwi is headed lower from here. You know, perhaps not directly, but it definitely looks bearish. So obviously, one of the best pairs to be along the USD, as Blake mentioned, is against the New Zealand dollar. So you know, we can't be sure yet what the dollar in general is going to do, but we can say that, you know, it seems that it's going to be weaker or stronger against that and that and that. Why we can't still say what the dollar is going to do is simply, and unfortunately, another week is passing and we still have no news. This is what I mentioned on the next week's preview last Sunday when I recorded it, is that, you know, as long as we're holding above this zone and below 94.20, the dollar is still in a sense that directionless. I was hoping that this week is going to, you know, bring some kind of a resolution one way or another. Unfortunately, this didn't happen, and as it seems, we're going to close another week trapped below the, you know, 93, let's call it roughly, area, and 94.20. So until that happens, until we clear this area one way or another, you know, we have to remain very nimble with dollar trades. I mean, it's a good idea. You can be long or short the dollar. Obviously, it's a good idea to choose against which currency is the best choice to be long and against which currency is the best choice to be short. As I said, the Kiwi is one of the best options to be long the dollar against. And you know, that's it. That's with that. So having to do with dollar pairs, you know, cable is one of the weak ones as well. Regardless, today we are rebounding, but as long as we remain above this high 133.40, call it, I think that we can still be more inclined to look at further depreciation than the opposite. The euro is one of the strongest one. It still hasn't managed to clear the 118.70, 118.50, 118.70 resistance. So, you know, as long as it fails to do so, you know, there is a chance that it's going to produce another move lower, but it definitely holds very, very nicely. So obviously the euro is one of the rather strong ones. The Kiwi is one of the weak ones. So that's why Blake was also showing the euro Kiwi, because, you know, that's the euro Kiwi. If you remember, we were looking at it, we were expecting a move higher. I haven't redrawn anything on my chart. That's what we had drawn when we were down there. So this was a corrective channel. We got a break higher. Okay, obviously, you know, a lot stronger move than initially expected. The 50 simple moving average seems to be working very nicely on the daily chart. We also have this channel. So we're currently, you know, approaching the 161.8. The channel resistance is above that as well. That's also why Blake said that, okay, yeah, I want to be long this, but, you know, is this the area to do it? you know, obviously chasing it up here is probably not a very smart idea. So let's redraw this, you know, perhaps something like that would produce like a nice opportunity. So a retest of this zone, let's say, you know, would perhaps, you know, just below 167 would be a good opportunity for somebody to try to join the upside. If we zoom out in this chart, you'll see that this has also likely formed a very nice bottoming pattern. So if we take this, right? This looks like a very long-term, nice rounded bottom. The reason I'm mentioning this is we also have the pound kiwi. I have been showing that for quite a long time, which is currently entering the most critical area to also confirm a very nice rounded bottom. Okay, it's this descending trend line. We're currently testing it. You know, if you want confirmation, you can be looking a little bit higher at these highs, which are at 190. If you remember, we have been showing this potential pattern since, you know, a long time ago. And, you know, this is going to constitute a major breakout. So any rejection from here to 190, a retest of the broken triangle would be a nice opportunity to rejoin the trend. Otherwise, if that does not happen, another potential, so one potential is this, something like this. Okay. Another potential would be if we see a stronger move higher to clearly break above without pulling back, perhaps then we get to see some type of a pullback to retest this big formations broken trend line and then higher. So for people that are not involved with the pound kiwi and want to, you know, join the trend, I think these are the two scenarios that will provide some opportunity perhaps to, you know, to align yourself with, you know, such a big development, bullish development. The RSI also confirmed this triangle. I mean, we had divergence. This got resolved by simply consolidating in time. We're breaking out of the trend line of the RSI as well. So, you know, I think it still looks very, very nice as a potential trade. Okay, let's have a look at a few questions. But by the way, I really have not much to comment about stocks yesterday. I'm guessing some of the questions are going to be about that. Yesterday's move got completely retraced to actually close positively. After, you know, at least this came from a very interesting technical area. It was the channel support. I remain short, and I'm absolutely comfortable with that. I've already bought the vast majority of my stop loss via the USD ZAR, as I said the other day. So, you know, I'm looking for a pullback rather soon. There's no question that the market is simply silly at the moment. I mean, the fact that we managed to close positively, even incrementally positively, at the day we got yesterday, you know, shows that I can't you know, explain this through psychology. I mean, it's very simple what's happening here and who is doing the bidding. But it is what it is, and that doesn't mean I see a lot of people giving up and thinking that, you know, the whole year is going to go like this. I believe that the stock indices can easily move another 10% higher, but I don't believe that we're not going to see a correction and see it quite soon. So, you know, I remain short and waiting to see that, you know, develop within the next few days. As I said, some of the indices have become even more silly than silly. I interrupted Blake before to mention that. The Nikkei specifically has rallied since the 11th of September at an equivalent pace that would make it a double every less than a year. Okay, so obviously a rate of increase that's equivalent in a yearly basis of more than doubling after seeing from last June, for example, we were at less than 15,000, and we're currently approaching 22,000. Okay, these moves are unsustainable in the long term, as simple as that. But my point is that these kind of type of moves that we've seen during the past 30 days are also unsustainable in the short term. So in the short term, we should soon see some type of a pullback. In this case, I would be looking for this ascending wedge, the broken ascending wedge resistance to act as support. Okay. Now, having to do with the yen pairs, I'm not going to tell you much about the yen pairs simply because we are now preparing a blog post about them. If you remember, I've been bullish a lot of the yen pairs, and I think the next move is going to be higher. But within a couple of hours, we're going to issue a blog post talking all about that. Not all of them, but several of them. So we're going to tweet about it, and you can read all about that. It's a combined blog post, so it's basic technical analysis, Elliott wave, and some macro stuff. So you can get through the blog post multiple views on the yen pairs. Do we actually believe 9 months of straight down in USD gets corrected in 1 month? I believe time and price is important. I agree with you, Rob. I agree with you. That's why I've stopped being bearish the dollar some time ago, and I've actually mostly traded the dollar during the past few weeks to the upside. But on the other hand, I do need to see a move above 94.20 to become more bullish. I'm currently like neutral, and this gets confirmed by the fact that there are several dollar pairs that you could have made money by being long the dollar during the past few weeks, and there are dollar pairs that you could have lost money by being long the dollar. So this mixed price action of the dollar against different pairs shows that confirms that the dollar still doesn't have a momentum either way. Okay, obviously the downside momentum has stalled. Obviously we're seeing an attempt of a recovery, but this recovery has not gained the needed momentum yet. Let's see. However, just want to share a basic MXN index daily. Looks like we reached a resistance. Cheers. Our marine. Let's have a look at it. Yes. Okay. Listen. Sure, but why should I trust this trend line yet? You know what I mean? I see what you're looking at, and this is going to prove to be a very beautiful formation. But this second trend line, the resistance is based on the assumption that this is actually a tradable high, but we're very close to it to confirm. It can be the case, but what I'm saying is that, I need more confirmation that this trend line has validity. I see your other trend line that confluences.
What would give it to you, Steve?
A deeper pullback from here. Because if you see at my chart in USD MXN, as you see, the pullback has been very shallow so far. Right. We came back, we retested this ascending channel. It seemed to be breaking down, which would create at least a healthy correction. I was hoping down to 1835, 1840. I would be a buyer there. I will be a buyer there because we might turn down from here once again. So I would be gladly buying the USD MXN lower. But at the moment, just look at the chart. Do we have a confirmation from a candlestick perspective? This was a very powerful reversal candle. There's no question about it. This was an outside black candle. It's a very powerful reversal candle, but we haven't confirmed yet. So, and today's price action, we've already retraced like more than 50%. So if this is to be the case, we should see USD MXN roll over again very, very soon, like within the next couple of trading days maximum.
Yeah. And then you're just wrong over the high. And then you're wrong over the high.
Otherwise, I see the move directly pushing through to at least 1930, which are those highs there, or even 1945, which is this area. As you see, it's a significant area of support resistance. Okay, so unless we confirm soon that we're going to have another leg lower, we might just straight push to that area before we end up having like a deeper correction.
I see you, Trent. Stand by.
Oh, Trent is in the house. Oh, it's already 4. Damn. Okay, let me see. USD ZAR. Okay, let's go. Okay, I'm going to go through a couple of questions very, very fast because Trent is here. USD ZAR, perfect retesting of this triangle, the triangle support, and another thrust higher. For the time being, I see no reason why this should not bring a new high. Gold, I'm going to just very briefly comment. I have no reason to be bullish. Actually, even if you go on a 4-hour chart, this can easily evolve in being a bear flag, this price action that we see during the past 3 days. So if I had to do something with gold at the moment, I would not think about it. I would be selling it. Okay. Steve, are you still liking CAD yen from 9010? Not only I like it, but I'm still long. Actually, I was 50 pips in the money. I'm now exactly at the price I bought it. Actually, just a few pips in the money. I wouldn't exclude the possibility of another push lower to retest the channel, but yes, I remain long and I like this formation as a bull flag. Okay, so yes, we did. I accept that today's data were horrible in the CAD, but from a technical perspective, nothing has changed much in this view. Okay, so yeah, I'm still long the CAD yen, and I might even consider adding lower at 89, 89.30, 89.60, depends on what I see happens. I mean, this zone might provide another support, or we might have to go down to the bear flag patterns support. Okay, so let's get Trent on.
Community, if there's one thing that I would model after Steve Volge, it would be his discipline. So if you could become as disciplined as Steve, you're actually on your way. Hi, Trent. I'm going to make you the presenter. Looking forward to talking to you. Passing you the baton, my friend. Looking forward to hearing your voice. Not sure if you want to use a screen share, and we prep the community for questions. So stick around for questions with Trent.
Yeah. Hi, Dale. How's it going?
Good, Trent. So nice to finally be able to talk to you. All we've done is we've been pen pals on Skype for a few months. So, I'm not a millennial. In fact, I gave up my cell phone because I got very tired of texting, and I like the human voice as far as knowing the inflections, all the miscommunications that people read into text. But great to have you with us today, Trent. And I'd like to say that what really impressed me, and I'm sure I'm going to learn from you today about the industry and different types of brokers, but you had to cancel our last interview because of all the hurricanes in Florida. And what was very beautiful was you weren't only concerned with your own butt, you were out there helping your neighbors board up their windows before the hurricane. And to me, that's a giving spirit. It's unusual in this industry filled with sharks and barracuda that only think about me. So great that you were out there helping others, buddy, because that's what we try to do here.
Thanks. Yeah, it was definitely interesting times. It was the first hurricane I've ever been through. I would like to not go through another one.
And I hope it's your last one, Trent.
Yeah, me too. Unfortunately, I don't think that's going to be the case in South Florida.
Yeah. So Trent, I usually like to start with how did you end up in this game? What was it like for you early on? What was your first gig? Who introduced you, opened doors, and tell us a little bit about the beginning of your journey.
Yeah, certainly. So I got into the industry through my brothers. I had two brothers that were futures prop traders for a large firm in Chicago.
Okay.
And that firm specifically, this was back in the day when they only hired athletes. So I was an athlete in college. When I was coming out of college, my brother's like, oh, come up, interview, see if it's the right fit for you. So I went up there and I actually watched my brothers trade for the first time. This was back in 2006, 2007. And I watched them trade, and I just remember being completely blown away by the industry. At the time, they were trading Henry Hub Nat gas. It's when it had that large increase. Before, I think it's like $2 now or $3, but this was back when it was like $12 to $13. But I was just sitting there watching, like, you watch somebody make or lose a lot of money, it becomes pretty fascinating pretty quickly. So yeah, I went up, I interviewed, did a few rounds of it, and thankfully they thought I was a good fit, and they hired me on in their rookie class. And as mentioned, it was all athletes at that time. So my rookie class consisted of four people. I was a D1 track athlete. Then we had a D1 football player from Boston College, a D1 golfer from Loyola in Chicago, and then a D2 basketball player. And that's the stereotypical person they hired back then. Things have certainly changed.
What was the rationale? The competitive spirit? And are you a Chicago native, Trent?
So I'm from Central Illinois originally, small farm town outside of Peoria. Their rationale was the competitive nature. They tried to actually hire taller people back then because this was right before they switched to completely on-screen trading.
Okay, because they still had open outcry and people threw elbows in the pit.
Yeah,
right?
That's Yep, I was actually the first rookie class that ultimately did not go to the pits. We were scheduled to, and then they just made the change because things weren't going well from the pits. So they made the change to where we would only learn on screen.
It's too bad. It's too bad. It was a blast. I can tell you from having been at the old Merc under Union Station, which turned into the Mid-Am, but it really was a great place to learn from all the guys on the floor. It was really an unusual and great time for me. So you made the transition and you started trading off the floor?
Yeah, so exactly. So we started trading on screen. It was a good process. I would say there's a reason why they were one of the top prop firms in Chicago, because they put you through a 6-month education program where I learned everything about futures and options. And I mean, prior to that, I wasn't a business major in college. I was history and poli-sci, so I knew really not a lot about the financial industry.
I spent quite a few weekends in Champaign, so maybe I'm a lot older than you, but I stumbled around downtown Champaign. So what a great campus!
It's a very, very country campus. So a lot of cornfields, a lot of pig farms.
Oh yeah, I was in DeKalb, a lot of cornfields there too as well. So, so you went out there, you started to trade. Blake was on a little earlier, and I think it's really admirable because I don't think trading is for everybody, and a lot of people, their egos won't let them accept that they may have more talent or enjoy different aspects of the industry. How did you come to that revelation?
Yep, that's an excellent question. So I traded for just under 3 years. I was 100% commission based, so very much eat what you kill. And for the first 2.5 years, it was great. I didn't have a losing month for the 2.5 years. And then all of a sudden I had 4 losing months in a row. And it wasn't, so I went back and started reflecting. I'm like, where am I losing money at? And by the time I covered my $4,500 desk fee and all the commissions to trade, that's where I was losing money. It wasn't actually in the markets. I was making money when it came to tick for tick in the market, but I was losing money.
That's a desk fee. I hope it was monogamy.
We had a nice office.
Yeah.
It was, but we had every amenity you could think of. We had a live squawker in the floor with us.
Oh yeah,
so
I remember those.
50 traders, and one guy was designated. He watched the Bloomberg terminal. He watched Reuters. He watched Dow. He watched all these different services, and he squawked to you. And it was really unique in the sense that he would actually tell you to buy or sell. So he would say a piece of news event came out. He's like, sell S&P. And everybody would just click, because it was really before the automated systems got in there. So this is what you needed, basically somebody to analyze it for you just so you could click the button. So that was really unique. But so going back, I quickly realized that I don't have the emotional capacity to trade full time, to say it lightly. I did not handle the drawdown very well. I just wasn't accustomed to losing, because I hadn't at that point. And when it started, I just didn't really know how to stop it. So it started making me explore the different sides of the industry, which is what led me into the brokerage side of the business, which is where I've been at since 2012.
Okay, so you made the transition. You recognized something that you're basically, it made you unhappy. And we all want to be happy with what we do every day when we get up, don't we?
Yeah, I couldn't agree more. So
it
was more the stress factor.
Hard to be happy when you're stressed out all the time, in my opinion.
I agree. I am still, to this day, I'm so impressed with people that can trade full time. I think it's an amazing feat. And it's very underappreciated. It's not even from just the financial standpoint. Like, sure, you can go out and you can make $100,000, $200,000 a year trading full time, but just dealing with the stress of it during that period of time, I think, is the most difficult part.
Okay, so tell us about your next step.
Yeah, so after I traded, I started looking at the different sides of the business, and like I said, once I factored in commissions, I realized I was paying a heck of a lot of money in commissions. I'm like, all right, well, that's a natural progression. I had a lot of friends that had switched from being traders to more of an operations guy on the brokerage side or the clearing firms, and then ultimately I was sort of over futures at that time, and that led me into actually getting into the Forex market. I had a mutual friend, acquaintance that was friends with the guys at Think Forex, and they made an introduction, and thankfully the guys over there thought I was a good fit, and they hired me on to head their institutional sales for Think Forex, which was an ASIC regulated brokerage firm at the time. Now they've since become ASIC and FCA regulated. But yeah, so I headed their institutional sales, which primarily consisted of working with IBs, white labels, so somewhat affiliates, money managers, people of that nature.
Okay, so you have a lot of experience. That was your first. You're not still with them, are you?
No, I'm not. Yeah. So yeah, I definitely have a unique background in the industry.
Tell us what's unique about it, and explain the different regulatory bodies, because like Blake was saying today, it's not only how you trade, it's also so critical where you trade, where you domicile money, how much money you can feel comfortable leaving on the books, and the regulators and the protections, because in the old days, if you had an account with the clearing member firm of the Merck or the Board of Trade, if they went down, the exchange guaranteed the funds, even all the way to Stotler. I don't know if you were around then. But then you had a lot of non-guaranteed IBs that if they went down, you lost your money. So why don't you tell us some of the important ingredients of what people should consider when they're selecting a broker?
Mm-hmm. That's an excellent question, because that's literally what I do all day, every day now, is help clients select brokers. and choose the right brokerage firm for their trading account. I actually helped the guys at ForexAnalytix. You guys might recognize my name for those listening in. I run the subscription reimbursement program, the support side of things, where I help people get set up at the various brokerage firms and then help them actually save money off their subscription at ForexAnalytix, which is a great program the guys over there came up with. I think it's incredible what you guys do, and you guys are truly trying to help people, and it's evident through these various programs that you guys run and different offerings that you guys have. But yeah, as you mentioned, Dale, and as Blake mentioned earlier, it is very important to make sure that you are choosing the right brokerage firm for your trading account. Unlike on-exchange products, off-exchange has a host of variables that a lot of people just don't consider because when they're coming into the industry, they just don't know a lot about it.
Are you talking about CFDs?
I'm talking about spot retail Forex, CFDs, any FX related product, which is just different from a futures because it's off exchange. So the regulation's different, the platforms are different, the execution style that a broker does with your trades is different, the commissions, the spreads, they're all different. There's all these variables that go in that make it a very unique industry because every single broker essentially has a different offering and not one broker is the exact same. So it definitely can make it challenging for a new trader coming in and trying to navigate the waters. And what we've found is, left up to their own devices, a new trader typically will go to Google, they'll search best Forex broker, and whatever pops up first, which is generally the broker that spends the most money on advertising, is the broker that they go with, which is not always the best case because it might not fit their particular trading style.
So you brought it up, Trent. What exactly happens with the reimbursement program?
Yeah, certainly. So the reimbursement program is, if you open your trading account through one of the partner brokers, which there's about 12 of them on the website right now, they're all regulated and reputable. They're all either ASIC, FCA, IROC in Canada, regulated brokers. But if you open up one of your accounts and sync it to the program, you receive $1 back for every one standard lot you trade towards your subscription program or your subscription to ForexAnalytix. So say if you're paying $89 a month for the top tier program and you trade 89 lots that month, you essentially paid for your subscription and it would be free that month, doing what you otherwise would be doing. You're going to apply the knowledge you're learning from ForexAnalytix someplace. You might as well apply it and get the reimbursement.
What a great concept.
Yeah,
So,
it's something Blake and the Steves came up with. I thought it was an excellent idea.
So why don't you tell us a little bit about, say, for example, brokers that are regulated in Cyprus? What do you tell people that are considering opening an account with brokers that are there? I know there's even, Cyprus probably looks like a Cadillac compared to a lot of brokers are in Belize. I don't know what the regulatory agency is in Belize, but there are all kinds of unusual domiciles for brokers. What are your top three to avoid?
Well, just going back, I think ultimately it comes down to the people running the brokerage firm. I mean, evil can still prevail even in a regulated jurisdiction. It's just much more difficult to do so because
You mean like Russ Wassendorf?
That's a prime example. Yes.
Okay.
PFG was a very prime example to where they were in an extremely heavily regulated environment, and he was still able to get away with it for 20 plus years. So evil still can prevail.
Right.
But the reason why regulation is there is ultimately to benefit the client and the end trader. Where some of these lesser regulated jurisdictions like Cyprus, Belize, like you mentioned, BVI, there's a reason why you see so many brokerage firms there, and it's because it's easy to get regulated, which ultimately means there's not a lot of oversight to assure that they're providing fair conditions for your account. So yeah, we try to avoid working with brokers that are out of there. I think the only one that we really do work with is FX Pro, but they also have the FCA regulated entity, which is where the vast majority of our clients are at. But we've been out to their office and met the guys.
Okay, are there different rules for these brokers as far as segregated funds compared to pooling them, and even though it may show up as an individual account, they're really not segregated?
Yes, that's correct. So a big thing right now that's actually going through in Australia in 2018 is brokers will no longer be allowed to use client deposits for margin purposes at their liquidity provider. So a lot of people don't know that that's actually the case. So when you deposit money with an Australian broker right now, your money goes into one client trust account. So all clients at that brokerage firm have their money there. And then currently the broker can take 50%, up to 50% of that money and give it to the liquidity provider where they're offsetting your trades.
Okay, so they're using client money to meet their cap requirements instead of their own money.
Not their cap requirements. No, that's separate. So the cap requirement is considered their operating capital, which is separate from client money. So they can't use any client money to run their business. So they can't pay for their office space. They can't meet their net cap requirements with client money. But what they can do is they can currently put money with their liquidity provider. So say they're PBN through like a Deutsche Bank. They could send up to 50% of client money to Deutsche Bank in order to execute the client trades there. ASIC wants to crack down on that practice. So what they did is they're preventing that procedure where the broker is going to have to take their operating capital that's away from client money and send it to the LP to offset trades. So now, in essence,
probably eliminate quite a few FX brokers in Australia that do not have that type of liquidity.
I guarantee it's going to happen. A lot of them are going to go by the wayside because they can't afford to put their own money up. But it's a good thing for the client because now when you deposit with the broker, your money sits at that brokerage firm in that client trust account and cannot be touched.
Okay. Can you touch upon the difference between different brokers? That some are ECN, some can trade against you. I'm far from an expert on trading debts or trading operation business models, and which would be more in favor of the retail trader and which would be more out of favor for the retail trader.
Yeah, certainly. So there's really two buckets of execution style, even though you might hear a bunch of fancy names like ECN or STP, but there's really two styles. There's either a market making broker or there's an STP broker, which means straight through processing. The market making is similar to what it sounds like. They are the counterparty to every single one of your trades and they take the other side. That doesn't mean they're not offsetting your trade in the market. So a lot of brokers will take all client trades in and then they'll run their they call it a book based off the aggregate position that they have. So say all clients come in EURUSD and now they have 10 million net long of EURUSD, but they don't want 10 million, they want 5 million, they'll go offset 5 million of it. So they're not trading one for one against every single client. That's not to say some don't do that, but a lot of them run it as a total book. On the other side, you have the STP model, which is straight through processing. A lot of brokers will call it ECN as well. ECN basically just means that you're getting the raw spread from the liquidity provider, and then they charge a commission on top of that. So typically it's like $7 per 100K round turn. But STP just means they are not taking the other side. So when you execute a one lot, they in turn execute the same one lot at the liquidity provider. In terms of, go ahead.
Trent, can I ask you a question out of curiosity? First of all, we have some questions for our friends participating here, and we have two questions. And I think anybody else that has questions for Trent, I mean, he's your go-to guy to answer all that. I mean, he's in the industry. Yeah, they just became 4 questions. But I want to ask you a question. Do brokers build some kind of a database saying that these are the well-performing clients? They are most of the times making the proper trades, and these are the clients that are usually trading badly. So let's form an algorithm that says, I'm going to execute proprietary somehow on the side, you know, what the group A does or against what the group B does. And when I say against, I mean still proprietary trading, but by using the statistical data from the client base, which is quite significant. I mean, if you're a big broker that has thousands of clients, the statistical results you can draw out of that are extremely valuable, right?
Yeah, I certainly think that goes on. It definitely goes on in market making brokers where they do analyze. They analyze every trade, and if you're a profitable trader, they'll put you into bucket A and they'll just STP all your trades off to another counterparty. If you're an unprofitable trader, they might elect to take the other side of your trade, whether it's on a one-to-one basis or it's on an aggregate of the overall positions.
Okay, it makes sense. So that's not illegal in any way, right?
So it depends. In some jurisdictions, it depends what type of license you have. So in Cyprus and the FCA, for example, there's 2 different licenses. You have a market making license and you have an STP or matched principal only license. So it's important to know what your broker has or which type of license they have.
Great input.
Australia just has 1 license.
Nice.
Okay.
You want to transfer the questions or you want me to do it?
No, go ahead, Steve. Go ahead,
Okay,
buddy.
Tom is asking, how and where can I trade the CFDs from the US? I currently trade Oanda US. That's the question from Tom.
If you're in the United States, unfortunately, you cannot trade CFDs. The regulators have prevented it because they want you to trade those products on exchange. So unfortunately, you'd have to trade the futures markets in order to trade different indices or the commodities.
And that also applies, he didn't ask that, but I'm extending the question. That also applies since he's a US citizen, even if he tries to get an account with an European brokerage firm, he's going to get the same restriction.
He's not going to be able to open an account with the European broker.
Okay.
So the CFTC, through the Dodd-Frank Act, they've made it illegal for a broker that's not regulated by this CFTC.
So nobody's going to accept the business.
I think you got the question wrong. I think that Tom is not from the U.S., but he has an account.
I trade the CFDs from the USA. I currently trade.
I believe. Okay, he's not from the U.S. that has a U.S. account with Oanda, and he wants to know why he can't trade the CFDs from the USA.
Okay, if that's the case, and he's not a U.S. citizen, I guess then he can do something else, right, Trent?
Yeah, correct. So I would recommend him opening an account with Oanda through the UK entity, which would then give him the ability. The reason why he's not enabled to trade CFDs is because his account is held with Oanda US.
Oh, okay. I was wrong. He's in Michigan. All right.
Okay. Dale asked him about IB, unless I missed it, Michael says.
Interactive brokers?
I'm guessing yes.
What about them? Yeah.
I think they are actually a good firm. The reason why we don't particularly work with them is because they require us to mark up the cost in order to get paid, which goes against all of our principle. We try to reduce the cost of trading for clients. So where a lot of brokers in this industry, they'll give the price to every client. So say their euro price is 1.3 pips. They're going to give that to a client regardless of whether they're working with us or if you go into them directly. The only difference is if we send the client to them, they might give us 0.4, 0.5 of that 1.3. Which
so in essence, it makes it, working with them would make it, instead of making it better for your clients, would make it more expensive.
That's
right?
correct. Yep.
Yeah.
That's the reason why we don't work with them.
All right, here's a great question from John Wu. Brett, what's your view on trading currency futures versus trading retail FX?
That's a good
Which
question.
would be better? Yeah.
I think it ultimately depends on the type of trader you are. So I actually did trade a lot of Euro futures when I traded. I actually found it to be a rather difficult market to trade. And then when I switched over to spot FX, I trade the Euro USD, which I found much easier to trade.
Okay.
Typically speaking, I think if you're actually an active trader, it's going to be cheaper to trade the spot FX. And FXCM actually did a lot of studies on this back in 2013, I believe, or 2014, and they did the study and gave it to the NFA, where they proved that it was cheaper to trade the spot FX market with them versus going to the future side of the industry.
Also, don't you would have more liquidity to trade after the U.S. exchanges, the CME, which trades IMM currencies. Their aftermarkets aren't as liquid as spot markets.
Yep, that was going to be my next point. I think then if you're a larger trader, if you're trying to get off 5 to 10 lots, I think you're better off trading the spot FX market, or if you're trading more than that, because ultimately the futures just doesn't have as much liquidity as retail FX, and they can't be customizable. So if you're a really large trader, say you're needed to trade 100, 200 lots a trade, or 10 to 20 million a click, you cannot do that in the futures market. You'd sweep the book. They would stuff that price so far against you, where in the spot FX market you can actually do that. You can go to your broker. I know Oanda guarantees a fill up to 10 million at the price they're showing. So yeah, the liquidity is definitely deeper in spot FX.
Saeed is asking, hi everybody, I have a question about brokers' earnings. I believe most of them are closed markets, even STP regulated brokers. Could you explain to me your knowledge about this, please?
I'm not. So he's saying, when he says closed markets, he's asking if they're just taking the other side of their trade, even if they're claiming their STP.
I'm not sure. Can you clarify, Saeed? I'm going to go to the next question until he clarifies. Okay. Andy is asking, what happens when a broker does a look back on an order and fails to fill that order?
That's a good question. So typically it's not the broker doing the look back, it is the LP for that broker. And ultimately what happens after that comes down to the broker and the client on a one-off or individual level basis. So for those that don't know what look back is, basically in the OTC markets, liquidity providers and banks still have the option to cancel a trade after it's already been executed. And they have, most cases, they have up to 24 hours to tell the broker that they canceled it. So it's very rare that it happens now, but you might get filled on, let's say, a one lot of USD, and then an hour later, the LP is like, no, I don't want that trade. I don't want that trade. They cancel that order, and now that's when the broker can either honor your trade and just eat the difference, or they come back to you and they're like, hey, we have to cancel your trade because we got it canceled by our LP. There's actually a big fight right now in the industry. I was reading today, Alpara US is going after all these banks because of this last look practice, because they were essentially eating every single trade and not passing the cost on to their clients. So they lost substantial amounts of money because of this practice. So ultimately, I think it's going to go away in the industry. I don't see how it can survive. Brokers hate it, retail traders hate it. The only ones that are actually winning are banks, which are losing a lot of the flow anyway to more prime of prime brokers that are acting as counterparties.
Good.
Okay, very nice. By the way, Fernando is asking a question which is actually quite interesting. He says, what about those US clients with dual or triple citizenship? Can an account be opened in the UK or another locality?
If you can prove residency outside of the United States, you can open an account with an international broker. It's based on where you reside versus what your citizenship is. So if you reside in the United States, then no.
Okay, so it has to do, then if you have multiple citizenships, it has to do with proving that your permanent residence is outside the US, correct?
Yep, correct.
Okay, Luca is asking, is there a ticket size in the most liquid pair that will put you on the radar screen of the big market makers, meaning they'll come after you and hand you down?
No, that's not the case. The only time I would ever say that that's the case is if you are a news trader, which every single broker and liquidity provider deems as toxic flow. So if you go, and what I mean by that is if you execute a trade within the second a news event comes out, that's when you're going to get flagged, because ultimately it's detrimental to the broker on many different levels, and we could have an entire webinar on that. But ultimately that's really the only thing that ever flags a trader as maybe somebody that broker just doesn't want as a client because it's harming their business. So yeah, it doesn't come down to ticket size. It's more if you're just trading around news.
Okay.
Which leads to the next question from Andy.
No, before that, Said confirmed that your assumption on his question was correct. The one he says that I believe most of them are closed markets, even STP regulated broker. Could you explain to me, your knowledge about this? Yep. So you made assumption. He says yes, please.
So that's not the case. And the reason being is Cyprus and the FCA and these regulatory bodies distinguish the difference in terms of the licenses. So if somebody has an STP only license, they have to match off every single trade that comes into their platform with an other liquidity provider counterparty within a certain period of time. I think it's a couple seconds. And if they're not, they get flagged and they come and get a big fine. So in those places they can't. There are some places where they can still do that, but you see, and you could see with FXCM tried to do that in the United States, where they claimed to be STP, and they were, but they were essentially what the NFA said was they were STPing trades to another firm that they had a financial stake in, and you saw how they got shut down and kicked out of the United States rather quickly once it came to light what they were doing. So yeah, I don't think that really happens anymore.
Speaking of FXCM, Andy mentions it, saying on BOE September 8 decision, FXCM refused to fill my pound-dollar long, so I'm looking to change broker. Thanks. He's just mentioning that. Can they actually do that?
They refused to fill it. I would want to see the trade in the journal. So if it's on MT4, I would want to see the journal around that time. So if he wants to send an email to brokers@forexanalytix.com, I'd be more than happy to take a look at the trade and see if there's anything I could do to help.
Okay, well,
I'm writing down the email you mentioned to him.
Okay. Trent, I, for one, am very happy, and I'm sure I'm not the only one, that you gave up just being a trader for yourself. Okay, because you are helping so many more people by educating them about what you discussed today, and exponentially you're helping so many more people than you would have been as an individual trader. So
yeah, being a trader, you pretty much just help yourself and who's ever backing you financially.
So maybe it wasn't your nature to be just about me, and that could have been another reason that led you to what you're doing now, because I learned a lot from you today, and I want to thank you for your time today and edifying our community. I want to thank you for your help in developing the reimbursement program to help our clients, our subscribers pay for the service. And it was really great to meet you and hear your voice and talk to you today. Well, I can't call you my trading warrior brother, but you're a warrior for you're a warrior for the people that really need to be educated about all the different aspects of the broker industry. And we do appreciate you being here today, Trent.
Yeah, I appreciate it. Thanks for having me on. I hope the information I gave was helpful. If anybody has any questions after this that didn't get answered, feel free to email us at brokers@forexanalytix.com, and I would be more than happy to answer them for you. And then
And Trent,
go sign up for the subscription reimbursement program.
that's what I want to say. It's a good opportunity to say that all our clients that are not located in the US are eligible to participate in that, correct?
Yeah, correct. So unfortunately, due to regulations, we can't offer the program to United States citizens, but everywhere else in the world, we can facilitate.
Well, maybe Donald, our president, Donald, make FX trading great again in the U.S.
If he rolls back Dodd-Frank, it certainly will.
Okay,
hey guys,
buddy.
hey Dale, can you hear me?
Yeah.
Hey Trent, how's it going? I got a chance to listen. I got a chance to listen to most of your interview, and it was great. Great information. I told people early this morning, you got to stick around for Trent, so hopefully they have. And remember, even if you're not European based, if you're US based, but you need some assistance, don't hesitate. Email brokers@forexanalytix.com and get a hold of Trent, and I'm sure he can help you, or help at least point you in the right direction. Is that correct?
Yeah, certainly. Yeah, don't hesitate to contact us anytime. Just because we can't work with the program doesn't mean we can't help you out.
Yeah. So great.
Yeah, if Brent can't, I don't think anyone can, Blake.
Right. Trent is he's very knowledgeable on this side of the industry, and we're glad to be partners with you. So thank you very much for your time.
Likewise. Thanks, Blake.
All right, have a great weekend, Trent. Steve, have a great weekend. Blake, Face, everyone have a great weekend. Do your work over the weekend, and remember, don't just count your pips, count your blessings, and we'll kill it next week. Adios. Thanks again, Trent.